Well, welcome everyone to today's webinar on financing coral reef conservation and management. This is the third in a series, and today we're going to be hearing about conservation trust funds and impact of investing. If you're interested in hearing any of the previous webinars, you can go to www.openchannels.org/webinars, and you can find the previous webinars in the series. And we're very pleased to have Katie Matthias and Nicholas Pascal here. Katie is representing the Wildlife Conservation Society and the Conservation Finance Alliance, and Nicholas Pascal is with Blue Finance. I'm Sarah Carr. I'm coordinator of the EBM Tools Network, which is a service of Octo. And this webinar is co-hosted by Octo and the Reef Resilience Network. We have Sherry Wagner on, who's representing the Reef Resilience Network. And this webinar is sponsored by the International Coral Reef Initiative, ICRI. And to let you know a little bit more about ICRI, ICRI is an informal partnership which strives to preserve coral reefs and related ecosystems around the world. They're sponsoring today's webinar as part of its collaboration with the Coral Finance Alliance for promoting innovative financing for coral reef conservation. To let you know a little bit about how the webinar is run, we're going to have initial presentations by Nicholas and Katie, and then we'll move to question and answer. So it'll sort of be about half and half for those two parts of the webinar. Now we'll have Q&A today, live today, but there's also going to be an opportunity to have additional questions answered and also have additional discussion, which is going to take part online as part of the Reef Resilience Network's forum, online forum. And we'll be posting information about how to join that forum in the chat, and as well as right after the initial presentations, Sherry Wagner with the Reef Resilience Network will get on and give more information about how you can join that forum to continue today's discussion. So anyway, welcome Nicholas and Katie. I'll turn it over to you, Nicholas.
Thank you, Sarah. Hello everyone, my name is Nicholas. I'm Director of Blue Finance, and I'm going to share with you through this webinar one of our recent experience in Dominican Republic regarding blended finance and impact investment for marine protected areas. Today's agenda is going to be shared between Katie and myself. I will present first impact investment for marine protected areas, so one of our ongoing projects in DR, and Katie will present you impact investments and conservation trust funds. Okay, and after, as Sarah mentioned, we will have time for Q&A. So very quickly, so we try to make very short 15-minute presentation. So I will try to be short, and I hope I will not speak too fast. So Blue Finance, so our main DNA is really to develop solutions for marine protected areas. The rationale is quite straightforward. We know that MPAs or marine management areas are one of the most effective tools for coral reef management and conservation and coastal management in general. We have many targets, and I think we have a new one now, the 30% protected by 2030. We used to have a 20 for 2020, but we're very far from reaching it. We know also that MPAs can provide some very positive impacts when they are properly managed. We know they can provide some food and incomes for local communities, opportunities for the blue economy activities, e.g. tourism or renewable energies or recycled industries. We have also shoreline protection that can be provided by coral reefs or mangroves or seagrass. And all of this is encompassed through the marine management areas. So the challenge, and I think most of the people here on this webinar are aware of it. We know that most of these MPAs are not effectively managed. Some figures show that up to 90% have inadequate staff capacities, and up to 70% doesn't have enough budget for basic management. So this is what we call paper parks. So this challenge creates also an opportunity. We have today more donors and more impact investors regarding the ocean and the coral reef ecosystems and other marine ecosystems, and seeking effective marine conservation projects with a proper management. We have also identified by many of the MPAs under collaborative management are financially sustainable. And I will come back to this aspect because this is the key approach of Blue Finance is developing this kind of collaborative management between government and local NGOs for the management of the MPS, trying to make them financially sustainable. And we have also an increasing number and trend of social entrepreneurs. So people coming from the business world, but trying to have a different approach than only focusing on the bottom line of maximizing profit, but much more directing to impacts on the environment and social. So putting all of this together, the Blue Finance proposal has been in the last 4 years, pushing for the development, and so obviously working with governments for the collaborative management of MPAs between governments and NGOs with blended finance solutions. So we do both. We structure and we help structuring the co-management agreement of a collaborative management agreement between these two actors. And we also provide some kind of solutions for this co-management entity to be financially sustainable. This is not something new. This is not Blue Finance labeling or copyright. Co-management entities or co-management NGOs have been existing and have a good track record in many areas of the world, in the Caribbean, e.g. Bonaire, Belize, Roatan, St. Lucia, Saint Martin, or in Southeast Asia, in Philippines, Indonesia. So we have quite a good track record of NGOs having a co-management agreement with government and having reached some kind of financial sustainability. And obviously what we are targeting, effective management of the MPAs. Okay, so we need more of this collaborative management for MPAs. And we propose this as a solution, not the solution for all MPAs, but a solution for some of the MPAs in the world. I'm going to share with you one of our recent achievements in the Dominican Republic. So we have a marine sanctuary called the Southeast Marine Sanctuary. It's a huge one. It's one of the biggest and largest one in the Caribbean, dealing with 8,000 square kilometers of marine habitats, 100 kilometers of coastline, and the primary tourism centers. Punta Cana and Romana are most of the most known tourism hubs in the Caribbean. So what happened in DR? DR, we have a very usual situation. The MPA was designated in 2009, has been inactive since, so essentially a paper park. We structure on demand of government an agreement that was signed between the Minister of Environment and a non-profit entity. This agreement has a 10-year period for renewable and defines the roles, responsibilities, and all the revenue mechanisms for the co-management of this sanctuary. Okay, so the non-profit entity that has been created for the co-management is comprised of local conservation NGOs, local foundations of some of the tourism holdings, and communities. Okay, it will receive, so it's more than will. It's receiving guidance and monitoring from a multi-stakeholder co-management committee that has been established after the signing of the agreement. And the relevant ministries, e.g. fisheries, environment, maintain their core functions, regulation of use, compliance. There's no change at all in the role of government, business as usual. This agreement is merely a service agreement where government is delegating some of the activities to a non-profit entity. So this entity will be is in charge of the day-to-day operational management of the sanctuary. And as Blue Finance, besides structuring this agreement, we also provide a long-term technical support to the entity on demand to improve the entrepreneurial skills of the NGO. The business model behind this, and I think this is where this model is original. The entity will generate its own incomes from statutory user fees. So the entity has to receive a mandate from government to charge the user fees. It has to provide, obviously, good value for money for the visitors. And we also complete these revenues with an innovative edutainment visitor center. This is the case in Dominican Republic. There are different revenue models developed in other MPAs in other countries. So I'm presenting you the one in Dominican Republic. The financing, we structure a major blended financing for the co-management entity up to $2.5 million US, coming from international donors, so usual and traditional grants and donation, and impact investors. And I think that's the object of this webinar, and I will come back to this. This financing will cover most, or not all, the initial capital expenditures for the NPA, e.g. Vessels, equipment, all the different underwater assets that has to be set up, and so on. We'll cover the cost of the visitor center and part of the working capital for the first 6 months of the NGO. Impacts, we will be assessed through specific KPIs developed for the site. And where we are today, this entity is now hiring the staff, so the director and a scientific director also, and is starting to purchase the required equipment to carry out the activities. One of the first one that they are dealing now is the marine spatial planning approach for the whole sanctuary. And all of this, and that's the beauty of it, is implemented without any public debt or any public money. So in a nutshell, so all the financial risks are supported by the co-management entity. We call it a special purpose entity. There's no increase in public debt, as I mentioned. There's no unpublic budget allocation. Government and national trust, in the case of some countries in the Caribbean dealing with national trust, they maintain the core functions. We don't ask any major change in government functions, and there's no transfer of property. This is not even a concession. It's a pure service agreement. It's not a long agreement. It has to be obviously balanced between government interest to maintain a public good and the interest of the NGO, but it's not a 200-page document. So this is for the concrete signing of the DR agreement that was signed in 2018, late 2018. You can see in the center, Minister of Environment, and the rest of the people around are coming from the entities, founders of the co-management entity. Okay, so a mix of NGOs, community organizations, and tourism foundation. I think this is a very classic. So the NPA, the sanctuary, and the co-management entity is expected to implement usual activities of any NPA directed to improving and monitoring the health of marine habitats, ensuring compliance and enforcement of regulations. So obviously that will depend on how agreement with government is a case by case in each country. In some cases, we will have a delegation of compliance. In other cases, will be what we call a soft enforcement. There's a lot of work towards community engagement and livelihood enhancement with the creation of new income generating activities and support to tourism activities. That is an important point. And maybe the one which is a bit specific to this NPA and co-management entity is really the focus on management and revenue mechanisms, okay, through marketing plan, user fee collection, some proper planning for this. So just to sum it up, the revenues from the sanctuary to implement these activities, as I mentioned, will come from the user fees and some incomes from a visitor center. It's important to mention that these user fees are statutory user fees, means they have to be paid by law. And the government has agreed that these user fees will be channeled directly to the co-management entity without going to consolidated fund. That's an important aspect. Obviously, beside a user fee, you have to provide tangible value for money for visitors, meaning clean and organized activities, visible conservation activities, and so on, and a good marketing campaign so people will know why are they paying these user fees. Okay, the visitor center is something also what we are developing specifically for DR, and this is what you can see in this slide. It's some kind of digital experience without any live aquarium, where people can spend half an hour, 40 minutes, and discover the marine biodiversity of Dominican Republic without getting wet. I will sum up the co-management agreement. So you can see in this infographic on the top of the graph, you have government authority on the left, and you have this non-profit special purpose entity, the co-management entity. So the main aspect here is the collaborative management agreement that has to be signed between government and the co-management entity. You have a stakeholder advisory committee that is set up to provide advisory and monitoring of the agreement. And as I mentioned, government, you can see the arrow going down to the marine protected area, and maintain its core functions of planning, regulation, and law enforcement. So The co-management entity will receive financing from philanthropic through grants and from impact investors in a formal loan, as a loan, okay, as a debt instrument. The idea, obviously, is to use this money to implement environmental and community and management activities that I've described before. The MPA, as you see, will produce some user fees, will have some revenues from visitor center. So these revenue mechanisms will be reinvested into the MPA, and part of it, a very small part, will be used to repay the impact investors loan. Okay, so that's in a very nutshell what has been implemented in Dominican Republic. I will give you a little more details on who are the investors behind. So we are dealing with the Sustainable Ocean Fund, Alfilia Mirova, which is an asset manager dealing with money from development banks. As you can see, the EIBs there, FMO, IDB, usual ones, and money from private sector, e.g. AXA investment managers. Okay, so we are mixing for these impact investors, a mix from development money and real impact investment money. Behind this deal, there's a strong coalition of partners, of local partners. Here I put all the partners we are dealing with in the Caribbean and Southeast Asia, but behind the DR deal, we are at least a coalition of 10 partners to structure the whole approach. Blue Finance has been obviously providing a comprehensive mix of expertise, so mixing environmental expertise with conservation finance, PPP, public and private partnership, business planning, and so on behind. You have some MPA practitioners also as part of a team providing on-the-ground experience for MPA planning and MPA business plan. Some quick advertising for Blue Finance. Blue Finance, so our mission, as I mentioned, it is really to improve the effective management of MPAs. We do it through implementing entrepreneurship approaches into the MPAs, and we leverage new investment models with blended finance. So our strategy is really unique. We design, finance, and implement the agreements for a collaborative management of the MPAs. We are NGO, we're not a big NGO, small NGO based in France. We have one operating hub in Barbados and another one in the Philippines. We have today 15 MPAs under development in the Caribbean, Southeast Asia, and Western Africa. And hopefully our long-term objective would be to have 20 MPAs efficiently managed and financed before 2030. I think you will have a slide as a copy, so I will not extend on this, but basically Blue Finance bring this mix of skills that are needed to this kind of original approach, innovative approaches, mixing environment and conservation finance. What is interesting is that we are working under the institutional umbrella of United Nations, UNDP in the Caribbean and Southeast Asia, which is facilitating the process of negotiation, institutional negotiation with governments to get this co-management agreement, obviously. And after, we are dealing with local partners in all the cases, because as I mentioned, the co-management agreement is signed between governments and local NGOs. So just as a quick shot, this is the process for each collaborative management agreement. It's a long run. As many people know, when we're dealing with government, process can be very slow. So we normally split it between 3 phases. One important aspect here is the co-management agreement signing that you can see between phase 2 and phase 3. And we normally plan 6 to 24 months to get this co-management signed between government and the local entity. So, and between this, you have a lot of design, work with local NGOs, work with impact investors, donors, and government and lawyers and so on to structure this before having the reward, which is the startup and long-term management of the MPAs, where we can provide some entrepreneurial expertise to the MPA. And that's it. Thank you for your attention. I will leave the floor now to Katie, and I will be very happy to answer your questions at the end of the webinar. Thank you.
Thank you, Nicholas. Let me just get my slides up and take it on from there. Great. So I am Katie Mathias, and both a conservation finance project manager for the Wildlife Conservation Society, working largely with conservation trust funds, and also a member of the Conservation Finance Alliance Secretariat, where I work with our over 600 members from around the world who are conservation finance practitioners. So I'm going to give a little background on conservation trust funds just for context, and then talk more specifically about the role that conservation trust funds can play in impact investing. So often when we hear conservation trust funds mentioned, people think immediately of endowments or of small trusts. But we use a broader definition that describes conservation trust funds as private, legally independent institutions that provide sustainable funding for biodiversity conservation. So they are really, in our usage, grant-making institutions, like foundations that you would see anywhere around the world. They have a specific focus on biodiversity conservation, and often, along with that includes livelihoods and climate adaptation and climate mitigation. They're catalyzing funding, which means in addition to however they started, often with a debt swap that created a sinking fund or an endowment, they are looking globally for additional funding for conservation protection within their area of focus. And that can include protected area management, conservation-based research, capacity building, and other conservation programs. They work closely in partnership with the government where they work, with civil society organizations, and with the local community and local communities, indigenous communities. They go back to the early 90s. We saw the first conservation trust funds founded in 1992. Now there are over 100 conservation trust funds in some stage of creation, operation, or in some cases wind down, where they've either merged with another entity or for whatever reason have sort of reached the end of their life cycle. Collectively, conservation trust funds are investing over $1 billion US in the capital markets to generate the returns that fund their conservation work. And we tend to see them in areas of high biodiversity, which often means the tropics, and in developing economies where the national budgets can't be expected to fully fund the cost of biodiversity conservation or protected area management. I mentioned that there are over 100 conservation trust funds. We're actually in the process right now with the CFA of doing an inventory. So we expect that number to grow and this map to have significantly more red on it as we account for even more conservation trust funds that are functioning. We're seeing them in 68 countries, and that includes 14 small island developing states, as well as one global fund, the Blue Action Fund, specifically focused on marine conservation work. And although they're working within their own specific geographical area of expertise and focus, they're collaborating internationally to share knowledge, to build capacity, and to collaborate on conservation projects. So each of the regions of Latin America and Caribbean, Africa, and the Asia Pacific region have created formal networks that meet annually and share knowledge, come together as conservation finance practitioners. The Conservation Finance Alliance, which is a membership network, also provides some global resources that include a set of practice standards for conservation trust funds, an environmental funds toolkit where they share relevant documents and policies, the Environmental Funds Working Group, which is a quarterly meeting of experts in this area who, again, get together for knowledge sharing, and various workshops that help to build capacity, including investment management, expertise for boards, governance, and resource mobilization. One of the things that's critical for conservation trust funds, and I mentioned that many of them start originally with an endowment or with a sinking fund, but in order to be sustainable for the long term, they have to look at diversification of revenue streams. And most conservation trust funds that are being formed now are looking at this proactively. They have a business plan when they start to recognize that over-reliance on any one stream of funding is a recipe for stress and possibly disaster. So we tend to see them have an endowment or a sinking fund, and they're using those returns, or in the case of a sinking fund, both returns and capital, to feed into their annual budget that pays for their overhead, pays for their grant-making programs. If they have payment for ecosystem services schemes set up, then they may be making some direct payments as well. But they're also looking at diversified options that include pulling in grants and project funding from the international community, potentially implementing biodiversity offset payments where they serve as a conduit for the collection and then distribution of those payments from companies. They may be doing consumer-driven fundraising. We're seeing a lot of innovation in the way that conservation trust funds catalyze funding for biodiversity conservation. And I'm going to talk in a little bit about the role that program-related investment can play in that diversification. The four main roles that conservation trust funds can play in impact investing, certainly they can be institutional investors themselves. They can engage in program-related investment, which is really a blend of investing and grant making. They can serve a role as project identifiers, and they can participate in incubators or accelerators for conservation enterprises. So I'll take each of those in turn. On average, the average conservation trust fund is managing about $30 million US in their investable assets through a mix of endowments and sinking funds. So that's $30 million that they are putting out, expecting a financial return that's going to fund their work, but also an opportunity for them to achieve some of their mission as well. And they can use a portion of that capital to focus on impact investing funds. Two examples of that most recently. The Madagascar Biodiversity Fund made a commitment, I think about 2 years ago, that they would put 25% of their capital, which is over 12 million euros, into investments that both generate a social or environmental return and generate a financial return. So they can't risk giving up the financial return because they need that revenue stream to pay for their grant making and their other conservation work. But they've identified that by investing in publicly traded funds that have an impact investing focus, that they can also leverage that money to achieve a broader part of their mission. And so they are investing both locally in Madagascar as well as regionally in Africa, in African-based funds, and in Latin America and Asia. A more specific direct example is the Longi Mountain Conservation Trust in Malawi, whose purpose is to pay for the conservation of the Longi Mountain biosphere, which is a World Heritage Site. They actually created, so as very direct impact investors, they created a social enterprise power generator. They're essentially now an energy company in addition to being a conservation trust fund. And that, in addition to providing revenue for them, achieves critical conservation impacts by reducing pressure on the reserve, by ensuring that their local communities in a country where access to power is very limited, that the local communities are putting less pressure on the reserve and have electricity that helps to fuel their livelihoods as well. So we see in this case two sort of broad examples. One, where a conservation trust fund is using its capital in the broad capital markets. Another, where a conservation trust fund is really making a very direct local investment in a company that achieves a conservation impact, but also helps them to generate some revenue. Program-related investment, and this we tend to see more often in US or UK foundations, but it's something that conservation trust funds are looking at, is a quasi-investment, quasi-grant-making approach, where the conservation trust fund could provide loans, loan guarantees, in some cases equity investments, to the grantees that they have already vetted as good conservation practitioners. So they are looking for a financial return. They're expecting a financial return. It may not be a market rate financial return. It may be that they accept a lower rate of financial return, but they're also accepting that they could have losses. And unlike a typical impact investor who is going to have to write off those losses, because conservation trust funds are grant-making institutions, their losses effectively become grants. And so for that reason, they have a fair amount of latitude in how they approach this engagement, because they, again, are vetting things both from an investment perspective and from a conservation perspective. But they're also have some flexibility to make sure that if their financial investments don't work out, but the conservation impact is still achieved, then they've achieved success through their grant-making program. So because of that duality, both the investment committee and the grant-making committee, or the finance and grant-making departments, need to be closely involved in that decision-making process. It can't just happen as an investment or just happen through program or grant-making. And as I mentioned, this is still an emerging area for conservation trust funds. A number of them have written this possibility into their investment policies, but they're still exploring exactly how that might manifest itself for them. The role of project identifiers for conservation trust funds is recognizing that impact investing in the conservation space is a supply and demand issue. So we have private investors and we have conservation projects, marine fisheries, we have ecotourism ventures, we have MPA management, a lot of work that's happening in conservation that's looking for funding. So private investors have a supply of funding that they are looking to invest in conservation impact. Conservation projects, as everybody knows who's working in this space, have a continual demand for funding. There are not enough resources available to fund all the biodiversity conservation that we want to achieve. And this flip side is also true. Private investors are looking for projects to invest in. The conservation community has more than enough projects that needs money. The challenge is there isn't a market. There are a lot of investors who are looking, a lot of conservation projects that are out there, and we're still collectively working on ways to bring those parties together. Nicholas described an excellent example of the way that Blue Finance is doing that. Conservation trust funds can play a role in that as well. And in fact, his list of partners, Identified, the Caribbean Biodiversity Fund, is one of the partners in the Dominican Republic Blue Finance project. So in looking for investable projects, there are plenty of important conservation projects out there that they demonstrate the potential for conservation benefit. They're producing what we might call a positive conservation return. But great projects that are not investable because they're not ever going to generate profit or produce a positive cash flow. To be an investable project that appeals to impact investors, not only does there have to be a positive conservation return, but there has to be a strong potential that there will be both profit, so an economic return, and positive cash flow that can be paid back to the investors. And they have to be managed as a business. And making sure that you can identify that distinction is an important role, because investors are only interested in those projects that can demonstrate both the conservation return and the economic return. So in the role of project identifiers, conservation trust funds bring unique strengths that are important. The challenges that investors are facing is that these conservation projects are remote. They're often as I mentioned, they're frequently in the tropics. They're in small countries. They're tiny businesses in a lot of cases. And if you're sitting in your office in Wall Street or in San Francisco or Singapore or London, just being able to identify those opportunities is challenging. There are high transaction costs for due diligence, because you might have to fly all the way to Panama to check out one relatively small company to find out whether it's investable. Investors, even those who have environmental backgrounds, don't necessarily have strong conservation expertise. And continually, there's a challenge of measuring conservation impact. It's a challenge that exists across the entire world of biodiversity conservation, but it's particularly challenging for investors who are looking to achieve a conservation return to really understand how they're going to measure and verify that. Conservation trust funds bring, as a strength, very direct local knowledge. They are local grant-making institutions, and so they know the players, they know the people, they can physically see and touch the businesses that are being considered for investment. Because of that proximity, they have relatively low travel transaction costs to do verification. They're traveling, a few hours as opposed to flying internationally. The conservation trust funds, as I mentioned, have extensive regional and international networks, and that means that they can help to elevate their local small enterprises to an international stage, and do that through conferences and other collaborations that help to bring awareness to impact investors that they might encounter in those conferences. And because they are grant-making institutions, they already have measurement and evaluation processes in place to identify and confirm conservation impact, and they're able to translate that information to investors. So part of their role is just to identify projects and to help bring those to the awareness of impact investors who are looking for them. One of the biggest challenges, and this is the fourth role for conservation trust funds in getting involved in incubators and accelerators, is that in the life cycle of a business, they move from concept where the entrepreneur and the entrepreneur's family are usually providing startup capital. There may be loans and small business, access to small business grants. And then through the growth cycle of the business, you move into venture capitalists and the global capital markets, where we see more traditional lenders and public trading. Impact investors, generally speaking, tend to focus in the growth and mature stages of businesses. But the gap that we've identified, or known as the pioneer gap, is that for small conservation enterprises, often in developing countries where the rates of interest on loans are very high due to the risk that's involved, and where there may not be friends and family who have startup capital provide, conservation enterprises have a hard time getting off the ground. And so incubators or accelerators come into play to close that pioneer gap. They provide early stage funding and technical assistance to help provide startup funding, to provide funding for capital investments, to provide funding for working capital to help get through growing cycles or seasonal cyclicality in fishing, to ensure that the businesses have sustainable funding to keep going at affordable interest rates. So that's the role that incubators can play financially. On the knowledge side, in closing the technical skills gap, in a lot of cases, conservation enterprises that came up as conservation projects first may not have expertise in business planning. They may not have expertise in the kind of gap accounting that investors are going to be looking for, and other processes that international investors will expect to be in place before they can invest. And they may need building expertise in management itself. So incubators can play a role both on the funding side and also technical assistance on the knowledge side. Two interesting examples that are happening right now with conservation trust funds playing a role in incubators. The Seychelles Climate and Conservation Adaptation Trust has set up an enterprise fund. They actually issued a blue bond specifically for expanding the blue economy within the Seychelles to help a country that's significantly at risk from climate change to diversify their livelihoods and their economy, recognizing that over-reliance on any one industry is going to put their population at risk. And so their accelerator or incubator is going to make loans and provide startup funding to a broad range of businesses in the Seychelles that will help the population adapt to climate change. In the Caribbean, the MAR Fund, I should say the Caribbean and Central Pacific, the MAR Fund, the Caribbean Biodiversity Fund, and Pacifico, which is a collaboration of conservation trust funds in Costa Rica, Ecuador, Panama, and I think El Salvador, have come together to create Blue Challenge, which is an incubator for conservation enterprises, focusing initially on tourism, fisheries, and waste management that have the biggest impact that they've recognized on the marine spaces that they protect. And they're going to start out by doing that through technical assistance grants, and then potentially move on to making financial investments as well. So with that, I have reached the end of my slides and would then turn it over to questions for both myself and Nicholas.
Okay, great. And Nicholas, are you still, you're definitely on? I know you had to switch platforms. Yes, okay.
I'm here.
Okay, great. Okay. Before we launch into the questions, I wanted to let everyone know you can send in questions by typing them to the chat or the question and answer box. And we already have a number of great questions. And Sherry, did you want to just take a minute and let everyone know how we'll continue the discussion after the live webinar is over?
Yeah, sure. Thanks, Sarah. This is Sherry from the Reef Resilience Network, which is a global network of managers, practitioners, and experts. The network forum is a place where you can connect, share, and learn from others about how to better manage marine resources. So we encourage you to go continue the conversation on the forum. You can go to forum.reefresilience.org/network and click on the Join Forum button. Fill out the registration form, and then we'll post some of the questions that we don't get to today there. You can also go and post other questions as well. Thanks.
Okay, thanks, Sherry. The first question is for Nicholas. Are fishermen charged a user fee in the Dominican Republic project, or is it a no-take MPA? If it is no-take, is there adequate enforcement?
Okay. This is not no-take. It's a combination of conservation area, no-takes area, and the fishery priority areas and tourism priority areas. So I would say that the no-take areas represent 10 to 15% of the whole area. And this is still in discussion through the marine spatial planning. Regarding the first question, no, we won't charge any fees to the fishers. Okay, this is not at all a part of a business model. The fees are charged to visitors. So mostly international visitors that will go diving, snorkeling, or use part of the NPS facilities directly and through some service providers.
Okay, thank you, Nicholas. There's another question. I'll give you a second question too. How does the government of the Dominican Republic get additional funds for planning, monitoring, and enforcement in the MPA? Presumably they haven't been doing a great job since you call this a paper park. Do they get some share of user fees, for example?
That's a good question. Basically, I think here we're already solving major issues for the government. We're bringing a solution where they will have an MPA efficiently managed without putting any on public budget. So we have the cases mostly in the Southeast Asia where local governments ask for part of the revenues to come back to the local government budget. But normally most of the governments are very satisfied with having a turnkey solution where they don't have to put money and they just check every year that things are going as expected.
Okay, thank you, Nicholas. Next question is for Katie. Are there any legal restrictions on how the financial returns are used by the Madagascar Fund from impact investments?
That is a great question that I did not get to, the issue of the legal restrictions. So my understanding in the case of Madagascar is that they are investing in publicly traded funds as part of their investment portfolio. And so from that sense, they should not be experiencing any restrictions, because it would be the same on the flip side, you know, if they were investing in publicly traded oil and gas funds. which they wouldn't. But in that sense, there's not a constraint. But for a number of conservation trust funds trying to make direct investments in their countries, they are running into a number of challenges around their nonprofit status. That's been a huge challenge for Fondo Mexicano. The Mexican Conservation Trust Fund, is they're looking to explore impact investing. They've run into limitations on what they can do and still maintain their charitable status. And similarly, yes, there are challenges in just ensuring that that they maintain their focus on the focus of their mission that, for which they were registered, while at the same time diversifying the way that they engage with the conservation community. So again, because of the way that I understand Madagascar is doing it, they do not have an issue, but a number of conservation trust funds are running into that, and the legal issue varies by country.
Okay. All right. Thank you, Katie. This next question I think is for both of you. It's in Jamaica, we have 18 fish sanctuaries, which 7 are have government funding. Can we access funding from Blue Finance, or how can we access funding to increase enforcement and continue funding the sanctuaries? This would spill over into reef conservation and management.
Katie, you want to answer? No?
Well, yes, so this is Katie, and I don't specifically know the case of Jamaica. What I do know is that the Caribbean Biodiversity Fund is working throughout the region to make funding available for conservation work. So that would, and through the local Jamaican Conservation Trust Fund, which has completely escaped my mind right now, but it'll come back to me. So that would probably be the first place that I'd focus, is either through CTF or through the local Jamaican fund, to identify a project and identify ways that you can attract both grant funding and potentially impact investing money. But I'll turn it over to Nicholas to talk specifically about how to access Blue Finance.
Yes, we have several cases of similar cases as in Jamaica, where you have some MPS mostly run by national trust, for example, which are some kind of statutory bodies. Is not government, is not private sector, is some mixed stuff. So really, from the Blue Finance approach, we try to really focus on any kind of MPS where government has delegated part of the management. Okay, so in your case in Jamaica, I'm sure there will be some of the activities that can be maintained by government, and in that case, we will not directly finance them, and some others that can be overtaken by maybe some co-management entity that can be set up. Okay, so but here it's very high level, and this is just brainstorming. We will have to make a proper assessment there. Jamaica, we are already in many Caribbean countries. Jamaica, we know it's a big island. We're working very closely with the CBF, is one of our partners. So sooner or later, I think we will organize some approach there on demand of government, and see what we can set up, if we can set up a mechanism for the network of MPS.
Okay, thank you both. Let's see. Next question, and this is a really good one, sort of initially directed at you, Katie. Where do I find the impact investors to work with my conservation trust fund? What expertise do I need to build within my fund to convince these impact investors that we can help them and that they should partner with us? And what kind of technical assistance in analysis can we expect from these partners?
Those are great questions. Hi, Sean. So one of the resources I'm going to point people to is the Coalition for Private Investment in Conservation, which is a network of investment practitioners who are working very actively to move private money into conservation work. And they're a great resource as well for helping conservation trust funds to get started. The Blue Challenge, which is in the Caribbean, MAR Fund and Caribbean Biodiversity Fund is partnering with CPIC on the incubator that they're getting started. So that, I think that would be a start. I think also in the conferences, particularly the REDLAC Assembly of Conservation Trust Funds, which is put on by REDLAC, the Latin American Caribbean Network, but attended by international conservation trust fund practitioners, is a great place to meet interested parties as well. In terms of expertise, conservation trust funds play a really interesting role as translators of information. They translate language from government to conservation, small conservation NGOs, and from conservation NGOs back to government. And they play a translator role as well between the investment community and the conservation community. So really the expertise that's needed is to build up knowledge of the language of investors. What are they looking for? They're looking for returns. In a lot of cases, they're looking for market rates of returns, but they will give up some market rate, some return in exchange for achieving a conservation impact. But being able to speak that language is probably the most critical piece of this. And then having the expertise to identify what's the difference between a good conservation project and a project that has the potential to be investable, that has the potential to generate the return that investors are looking at. I would point you specifically to talking to the MAR Fund or the Caribbean Biodiversity Fund or Pacifico to learn how they're working with conservation enterprises in an incubation role, and also to the Seychelles Conservation and Climate Adaptation Trust to hear how they're getting those off the ground. And they can also share, I think, hopefully, what knowledge their partners are bringing to help them.
Okay, thank you, Katie. And was there anything else to add? Or we'll move to the next question. Okay, let's see. This one is, who, if anyone, is working to find more funding for enforcement or enforcement resources? You guys know of any projects out there?
One of our partners is Wild Ed, which is really focusing on working on the compliance and enforcement plans. They have their own branding for it, but more or less is this kind of support that they can provide. But police and compliance is government responsibility. So in very exceptional cases, like in the case of a co-management agreement, this is the only situation, legal situation, where government can delegate part of the police functions to a non-public entity, okay? So that's why I think we don't see more NGOs or more initiatives working on these critical aspects of NPAs, which is enforcement and community engagement, okay? Behind enforcement, we have to be clear also that you can put 24/7 police, you will still have some poaching. So we need a lot of community engagement also beside it. But really here, without any kind of co-management agreement with government and the legal framework, I don't see how we can enforce an NPA and replace government.
Okay, thank you, Nicholas. Just to let everyone know, we are recording this webinar. We'll be posting the recording at www.openchannels.org/webinars, and I'll type that up into the chat panel in a minute. So if anybody is interested in viewing the recording again, the webinar again, or sending it to anyone else, you can you'll be able to find it there within about 24 to 48 hours. Okay, we have time for a couple more questions. Let's see. This one is, thanks for the talk. Is Blue Finance planning to add Central American MPAs in the Pacific? I work for a heritage site MPA in Costa Rica. It would be great to explore possibilities for our case.
The answer is yes. Obviously, we don't want to spread too much of our resources. We are already in touch with your two ministers in Costa Rica, in charge of the protected areas. So Costa Rica is a very interesting case because terrestrial protected areas are quite well managed by government. Meanwhile, MPAs not so well, okay? So we're exploring if this kind of collaborative management agreement can't be an option for some of the MPAs, but that's very preliminary talk. We are dealing also in other Central America countries. In Honduras, there's a very good legal framework where Honduras, example, Raritan islands are already under co-management agreement for the last 7 years, managed with local NGOs. You have new MPAs that have been designated where we are supporting some local partners to ask for the co-management agreement.
Okay, thank you, Nicholas. There's a question, are there any good examples of successful financing mechanisms for locally managed marine areas or very small community MPAs?
Nicholas, do you want to take that one first? Do you want me to?
Okay, I will be very quick. I think the answer is very challenging. I've been working in Vanuatu and Fiji for at least during 5 years and 4 years. I think the small scale approach is challenging, and the entrepreneur skills are even more challenging. Okay, you know that there have been so many works and many platforms dealing with different revenue mechanisms for conservation or small scale businesses or things like this. So we know more or less what is feasible. The issue is mostly in the implementation. Okay. I don't say that we don't find the local capacities. We have some very good people. And even in the most remote village, you have some entrepreneurs that have a lot of capacities. But I would say that to upscale this and replicate this on a scale that would say, okay, we are financing part of the conservation effort, this is going to be very challenging. That's my only personal opinion, at least for Vanuatu, with Vanuatu LMMS.
I will add to that I was also going to say, yes, that is one of the more challenging issues. And I think a lot of the solutions, to Nicholas's point, maybe not replicable, tend to also have to happen locally, whether it's building up ecotourism businesses, building up where the locally managed area is not a no-take area, then are there aquaculture options or other kinds of revenue-generating programs that can help to enhance local livelihoods. I think there are also some opportunities for trust funds, but the important thing is to make sure that we're not setting up a zillion tiny trust funds that all have to be individually managed. There we look for opportunities for pooling, opportunities for scale, where the funding goes to multiple community MPAs, but the transaction costs are centralized. And again, we're not having each of these communities take on the cost of managing a trust fund. So there are possibilities. I also think there's a lot of opportunity around building capacity so that there is expertise in how to get community enterprises off the ground. And I'm working with the Pacific Ocean Finance Program on a fellowship program in the Pacific, specifically to build capacity in 13 different Pacific Island countries around ocean health, ocean governance, and ocean finance.
Okay. Thank you, Katie. Thank you, Nicholas. And we have run out of time, although there's still a lot of great questions out there. So I just wanted to let everyone know who did send in questions that we'll be providing these questions to the presenters so they're able to see them. I don't know that they'll be able to respond to all of them, but anyway, they will get seen. And so thank you everyone for attending, and a huge thanks to Katie and Nicholas for being willing to do this. We really appreciate you being on and sharing your expertise in this area. And thank you everyone for being able to attend, and I hope everyone has a good rest of their day.
Thank you, Sarah.
Thank you.
Thank you all.
Bye all.